Hello, everyone, and welcome to our final session of JA Economics for Success. Today's session is called What's the Risk? And we are going to talk about risk and insurance. So, I'm sure you've seen the commercials for lots of insurance agencies. Go ahead, sing the Liberty, Liberty, Liberty. See, I told you didn't want me to sing earlier, okay? We've got that one. We've got the gecko, the Geico gecko. Let's see, Mayhem from Allstate. You know, they come out with some pretty good commercials. Jake from State Farm. We can't forget him. Yes. But buying insurance is about protecting yourself from the what ifs of life. Think of it as a safety net. It's something you hope you never have to use, but if you do, you're really glad it's there. Accidents, fires, and thefts occur daily, but many people go through their lives without any of these things happening to them. So why would you want to have insurance for something that probably is never going to happen? We'll explore that a little bit further. So insurance may also be necessary for those times when we choose to participate in activities that tend to be riskier and more dangerous than others. So, did you know that male snowboarders are more likely to be injured than female snowboarders? Why do you think that is? Do you know that if you drive a red car, you're more likely to be pulled over or in an accident than if you drive a different colored car? Those things on the outside really don't seem to make sense. But studies have shown that people that drive red cars tend to drive faster and therefore have more accidents. So guess what? They pay more for insurance than people that drive blue cars. Sounds weird, I know. But insurance is based on your level of risk, and we'll talk about what that is in just a second. Do you think there's some careers that are more apt to have a higher level of risk? Maybe a policeman or a fireman? Those jobs are definitely higher risk than, say, the development director for junior achievement, right? Yes. So those people, generally, if they have health insurance, it might cost more. It also might cost more for health insurance if someone is 65, a smoker, and diabetic, let's say, as opposed to someone that is 21 and is in perfect health. So our next word is risk. This is the possibility of financial loss or physical harm. Risk can take lots of different forms. So there's an inherent risk with doing everything, right? By you getting out of bed today, there was an inherent risk. You could have fallen out of bed and hit your head. Generally, that's a pretty small risk to take though, right? Now, if you decided, hey, I'm going to go jump off a bridge with no zip line, that would be a much higher risk. So everything we do has some level of risk. But obviously there are some activities that have an even higher level than other activities. So insurance, I've been throwing that word around a lot, but what is it? It's a contract that protects a person against financial loss or damage. There's lots of different types of insurance out there. Some of the main ones, they provide money in the events of accidents, illness, and theft. So there's insurance out there to help provide if something is damaged, like your home or your car, if you have an accident, medical care, even your cell phone. If you were to drop it in the bathtub. If you have insurance on that phone, hopefully you can get a replacement then for a lot less than if you had to go out and just buy a brand new phone. There's also lots of different types of insurance that are specific to an activity that only certain people do. For instance, I don't drive a motorcycle, so I wouldn't get motorcycle insurance. However, someone that does have a motorcycle needs to have motorcycle insurance. Same thing with an RV. I don't have an RV. I don't need that. However, I do have a pet, so I actually have insurance for my dog. I know, sounds funny. But that way, anytime she needs to go to the vet, I don't have to pay any money. Instead, I pay a monthly premium, which hopefully works out that it's less money than if I had to pay every time I took her to the vet. So as I said, there's insurance for lots of different kinds of activities. So with insurance, we've got some key words here that we need to go through. The first one is a premium. That's just a fancy word for your payment. So when you pay a premium, you pay that amount of money to the insurance company to have their insurance. And a policy is your written contract for insurance. You always want to read through your policies. Yes, there are a lot of pages of big words and things that might be hard to understand. But you want to make sure that you're getting the right type of insurance for your needs. For instance, did you know that most homeowners insurance policies in our area don't cover earthquake damage? You have to purchase additional insurance for that. So heaven forbid, we are on a fault line here. If there was a major earthquake, many people that possibly thought they were covered would not have any insurance for that because they don't have extra earthquake insurance. The next two words, the first one is deductible. So this is money paid out of pocket before insurance covers the remaining amount. You probably have heard this in conjunction with health insurance. So even though you pay for your health insurance every month or year, you still have to pay a deductible. So this might be, there are high deductibles as much as $5,000 or $6,000. And then there are lower deductibles that might be $50 or $60. The difference is generally those with a high deductible pay less per month. So for instance, if you're a healthy 21-year-old, you might choose a plan that has a high deductible because you don't have to purchase medicine all that often. You're only buying insurance in case something drastic happens. However, back to our original example, if you're the 65-year-old diabetic that smokes, you might buy a policy that has a lower deductible because you're on several medications that would cost you a lot of money if you had to pay for them. Our second word is copay. So this is, again, mainly connected with health insurance. This is what you might have to pay when you go for a doctor's visit. It's a fixed fee an insured person must pay for a doctor's visit, an outpatient service, or a prescription. Generally, this is a fairly low amount. I believe my copay for doctor's visits is $25. So every time I go to the doctor, I have to pay $25. And then if there are any additional tests or fees, that's when the other part of the insurance kicks in. Okay, so we've gone through a lot of terms. Now we're going to go into some different scenarios. And what I'd like you to do is to think about these and think about what type of insurance would be needed to cover these scenarios. We're going to stick with the 5 most general types of insurance. That would be home insurance, homeowners insurance, healthcare, car, dental, or phone insurance. Like I said, there's lots of different kinds out there, but we'll stick with those 5. So the first one, heavy rains cause a sewer backup. Water damages the wallboard, furniture, and carpeting in your basement. It will all have to be replaced. Cost, if you didn't have insurance, $11,000. Let's assume you have insurance. What type of insurance do you think you would need in order to have this covered? If you said home insurance, you are absolutely correct. One thing I want to mention that a lot of people don't know, a lot of adults don't know this. If you are renting an apartment or a house, you do not need homeowners insurance. However, you need what's called renter's insurance. Renter's insurance is very important because if something happens to the building, let's say there is a fire at an apartment that you are renting. This actually happened to a friend of mine. The neighbor underneath where she lived left a candle burning and fell asleep, totally destroyed the entire building, burned to the ground. The people that owned the apartment were able to claim the building for their homeowner's insurance. However, my friend did not have renter's insurance, and because of that, she didn't get any money for anything that was burned up in the fire. The fire was deemed accidental. Had she had renter's insurance, it would have covered all of her belongings in that fire. So renter's insurance is generally very cheap, but it is definitely something that you want to look into getting, even as soon as if you are renting a college dorm or living in your first apartment. Definitely something you want to look into. Okay, here's our next scenario. Your phone is stolen from your backpack. GPS cannot track it. Replacement cost is $300. Now, I will say that's a fairly cheap phone. If you want an iPhone X, you're looking at replacement cost of over $1,000. But if you have one of these types of insurance, it would be covered. Which one do you think it is? This one's fairly obvious. Of course, that would be phone insurance. When you sign up for a cell phone plan, they will ask you if you want insurance. It's cheaper if you say no. However, you are certainly running the risk of something happening to your phone. Our next scenario. While eating a caramel apple, that sounds good. Wish I had one. You pop off the upper braces on your teeth. Replacement cost is $600. What kind of insurance would you need for this? Dental insurance is correct. Great job. Our next scenario and last scenario. Now pay close attention to this one. While texting, yes, it's illegal. Do people still do it? Absolutely. So while texting and driving, you don't notice a flashing traffic light. Your car hits a pedestrian in the crosswalk. You actually have two different kinds of damages here. You have bodily injury to the person that you hit, and that's $64,000. And car and property damage is $17,500. Now, first of all, hopefully this is not a real life scenario and you're not texting and driving. There's my PSA. However, what insurance would help to cover this? If you said car insurance, you are correct. So car insurance will help to cover any car or property damage as well as injury if you have an accident. So one last word we want to talk about is total loss, and this is when the cost of repair is greater than the property's value. This actually occurs more often than you would think. Many cars, especially, once they hit a certain age, it costs more money to repair them than they are worth. So an insurance company might declare it a total loss. The issue with this is you'll get back the money in the amount of what the car is worth, not what you paid. So an insurance company can declare a total loss on a house if there is any kind of destruction, or a car, or many other items you might have insured as well. So So before we get to our review, I just want to share one quick personal story. Many people think, why would I have insurance? It costs a lot of money and I'm probably never going to use it. That seems really silly and just throwing money away. You're right. You hope you never have to use it. However, in 2005, the house that I grew up in and where my parents still lived was destroyed by an F4 tornado. Many of you probably weren't even born then. However, I have pictures from the event and can show you some of the damage that happened. This was what we called the rec room. That pink stuff, that is all insulation from the ceiling. This was my parents' bed. They actually were not in it at the time. They had gotten up to use the restroom, thank goodness. And about 2 minutes later, the ceiling caved in on the bed. And finally, this was the backyard. As you can see, what used to be the roof is generally in the backyard. Lots of wood, splinters. They ended up declaring the property a total loss, knocked it down, and started over in building. However, because my parents had great insurance, they were able to totally rebuild their house. Had they not had such great insurance, they would have been out of luck. They would have had to foot the bill for fixing this house on their own. So, as this is our final session, we want to review all of the information. So remember, when you're looking for a career, you want to think of those that align with your skills, interests, and values. And then also please remember that your financial future depends on you. It depends on your choices about budgeting, earning and keeping a good credit score, making good decisions about using credit, and buying insurance to minimize risk. I hope you guys have enjoyed our sessions. I certainly have. I hope you've learned something about yourself, about credit and debit cards, credit scores, insurance, and I hope that you will be able to take this information and want to learn more about future careers and personal finance. Thank you so much. My name has been Autumn Baker. I've enjoyed being your virtual volunteer, and we'll see you soon. Thanks so much.